Welcome to Yahoo Finance Live. I'm Julie Hyman. That's Josh Lichten. We're here at the New York Stock Exchange to tell you what you need to be watching at 3 p.m. A strong start to earnings season thanks to the banks. JPMorgan, Wells Fargo, Citigroup, they all beat analysts' expectations as rising rates helped boost profits. But the companies did issue warnings on uncertainties from higher capital requirements to the war in Israel.
In the meantime, chaos on Capitol Hill. House Republicans scrambling now to decide who their next speaker is going to be. House Judiciary Chair Jim Jordan running again, and he now has a new challenger. That's Congressman Austin Scott after Steve Scalise dropped his bid. But neither candidate has the 217 votes needed to secure the gavel. What this leadership crisis means for key issues, including aid for Israel and possible government shutdown.
And we are watching commodities, both oil and gold, surging in today's trade. Concerns about the escalating war between Israel and Hamas have been driving prices higher. But we are not seeing prices go higher in the equity market. Let's take a look here. We've got a mixed picture for stocks to end the week here. The Dow is higher right now by about 26 points, but the S&P is off by 0.5%, and the Nasdaq down about 1.2%. As I look at the groups that are on the move today, energy is the best performer. That's along with higher oil prices. Consumer discretionary and tech are bringing up the caboose, as my colleague Brad Smith likes to say, Josh.
Big bank earnings taking center stage for investors, and so far Q3 results look pretty good for the industry. In a show of strength, JPMorgan seeing profits rise 35%. Wells Fargo, meanwhile, beat the street on earnings, though was hit harder than anticipated by rising expenses. And even Citigroup topped expectations amid its ongoing turnaround efforts.
Now, JPMorgan CEO Jamie Dimon said in the company's latest earnings call the bank had, quote, a solid quarter. He added these results benefit from our over-earning on both net interest income and below normal credit costs. Dimon did, however, show concern over the global outlook for the economy. Dimon saying, quote, this may be the most dangerous time the world has seen in decades. That's as the bank continues to prepare for a broad range of outcomes. And you guys, it's interesting as we look at these numbers here. Net interest income does continue to be a bright spot for the banks. That kind of stands out to the upside here. We are seeing sort of uneven expenses at many of the banks. That's another theme to watch. And then a lot of rhetoric, not just about the state of the world, like we just heard from Dimon, but about these increased capital requirements that are coming down the pike. And a lot of them saying it's not going to be good for us. It's not going to be good for lending, not going to be good for the economy.
Yeah, we have some great analysts coming up we're going to talk to about just that. It was interesting, too, Julie, just going into this print, a lot of these names had gotten pretty banged up. I mean, there were some exceptions, but in general, investors were not showing a lot of love to some of these names, but now they're reporting, they're beating. We can always, of course, talk about the expectations game, and
yes.
we should, but they are beating. JPMorgan, I'm looking at, earnings up 35%, revenue, the top line over there, up 31%. Meanwhile, Wells Fargo, profits up 61%. Worth noting, though, I'll call out PNC, because they are actually in the red in today's trade, where profits fell at that regional bank. You wonder if that's sort of a canary in the coal mine. I also did think, though, you brought up rightly, some of the commentary about what's ahead was really interesting, just in terms of sentiment. I mean, there was JPMorgan talking about geopolitical risk, but also there was Citigroup CEO Jane Fraser saying all these macro dynamics have clearly impacted client sentiment. She goes on to say, September is always a busy month seeing clients, and I'm struck how consistently CEOs, she said, are less optimistic about 2024 than just a few months ago. So it's interesting.
But if you talk to her at the beginning of 2023, I bet you and so many other people were pessimistic then. So really the key is going to be, are those expectations going to be borne out? This year they have not been. The consumer has held up much better than estimated. When you look collectively at the profits at these companies of $22 billion and pretty much across the board net interest income beating, it's just a very interesting trend. And again, speaks to the expectations game, if you will, or just the fact that people keep thinking things are going to turn bad.
Yeah.
And they just haven't really turned bad
Not
when it
yet.
comes to
Nope.
these corporate profits. Well, as we've been talking about, these big bank earnings showing some resilience amid headwinds like rising rates, bad loans. But can the same be said for regional banks, which are set to report next week? Our next guest says it could be another underwhelming quarter given the macro environment, and downside risks could remain going into 2024. Let's bring in Wedbush Securities Managing Director David Chiaverini to get some more thoughts on the topic. David, it's great to see you as always. We were just talking about net interest income. And if anything, the regional banks and the super regionals are more reliant on net interest income. The fact that these other banks seem to do well in that area, does that actually bode a little bit better for the regionals?
It does bode better, at least for the near term. Looking at third quarter results, we're expecting net interest income to come down, but be down less severe than what we saw in the second quarter. Higher for longer is going to be a headwind for the group. And I think the reason why we're seeing the banks sell off today relates to what you alluded to earlier, credit quality. Commercial real estate, when we look at PNC, their credit metrics, non-performing loans for CRE doubled in the quarter. And that's a concern looking out to next year as CRE maturities start to come through, and regional banks do have exposure to CRE. So it really is an issue of credit quality that I think is taking down the banks today, despite NII coming in, better than expected.
And David, deposits have stabilized, but banks are still going to have a tougher time just keeping depositors from chasing higher rates elsewhere. How much of a headwind do you see that in the quarters ahead?
Yeah, I think that's going to be a continued issue in the third quarter and into the fourth quarter. As long as the Fed is closer to halting its rate increases, and it looks like we are, near the end, maybe we get one more hike, then we're going to see kind of the second derivative slow down on increasing deposit costs. So we're getting towards the end in that regard. So that's the sort of bright spot. Everything above the loan loss provision line for the bank income statements should look pretty good over the next year, but credit quality is kind of the overhang.
Well, and we've been hearing from non-bank companies, right, that lower income consumers are starting to get maybe a little bit more pressured, a little bit more choosy. How is that going to then feed through to the banks from everything from credit losses to deposit growth to loans and anything else?
Yeah, it's a great point. I mean, let's face it, consumers drive 70% of the economy. So if they're showing weakness, it is going to filter through to the rest of the economy. And fortunately for the regional banks, consumer exposure is relatively low. Most of the exposure tends to be residential mortgage and that credit quality, and we see that home price appreciation continues to be, mostly positive, except on the coast. But the home equity that's been built up should provide some stability and lessen any potential credit losses coming out of the consumer. I do also cover some of the neobanks, so Upstart, SoFi, Lending Club, Pagaya, and they do cater to a couple of them are at the upper end of the credit spectrum, SoFi and Lending Club, 725 to 750 type of FICOs. But Upstart and Pagaya, they're at the lower end of the credit spectrum, and we have seen some weakness in their credit metrics. So that's something to be mindful of.
And David, commercial real estate is another issue we talk a lot about here. What kind of challenges that really pose for your coverage universe going forward? And are there certain names that are more at risk than others there?
Yeah, the ones that screen highly on commercial real estate, Comerica has more on the regional bank side. Even M&T Bank, which happens to be one of the names that we like, they have more commercial real estate exposure. I think that's why that company's coming under some pressure. On the mid-cap bank side, Home Street has a lot of commercial real estate. First Foundation, some of the Asian niche banks have commercial real estate exposure above average. So there are a number of banks that do have this exposure. That the good news with them is that time is on their side to build up provisions. It's not as if these maturities are going to all come in one quarter, like in the fourth quarter, for instance. Not going to happen. If that were the case, then we would see some severe issues. But considering most of these maturities should come in over the next few years, that'll give the banks some time to build up provisions to withstand some of the credit losses that may come through.
Well, speaking of building up provisions and changing capital, we heard, as we talked about, the large cap bank CEOs, sort of raising the alarm about increased capital requirements. What's the truth from fiction here? How onerous is it going to be? And what's the impact going to be on the regionals as well?
Yeah, so the proposed rules are contemplating risk-weighted asset inflation of anywhere from 5 to 15% for the regional banks. So it is a real issue, and of course that's going to pressure return on equity, right? Because then you're spreading out earnings across a bigger base. So there is definitely truth to the concerns out there, and it is eye-popping to see a company like JPMorgan seeing their risk-weighted assets going up 30% and the capital requirements going up 30%. That does pressure their ROEs. They put up a great ROTCE of 22% this quarter, but when you factor in a 30% increase in capital requirements, that takes down to 17%, which is their kind of long-term target. So it is a real issue for the banks.
And David, finally, you mentioned you like M&T Bank. I know you like Fifth Third and Customers among your top picks. What are sort of the commonalities here? Or why should people be looking at these three going into the earnings season?
Yeah, particularly for Fifth Third, their commercial real estate exposure, especially since the hot button issue today, it's only 12% versus peers are up at 20%. Also, when they spoke at a recent industry conference, all of the trends for the third quarter are looking as if they're going to come through at the better end of indicated ranges. So we're talking deposits, NII, fee income, expenses. It sounds like trends are looking good there. And then from a higher level, they continue to expand rapidly in the Southeast. And the Southeast market is a higher growth market. So that's good for them. Customers Bank Corp, one thing that they're doing that kind of stands out from the industry is their pipeline for non-interest bearing deposits is $2 billion. They expect that to come in over the next couple quarters. And why that's significant for them is that would represent a 50% increase in non-interest bearing deposits. And that would enable them to see some net interest margin expansion, whereas most of the group is seeing some compression. Now, M&T Bank, they're kind of a steady Eddie bank. They grow typically in the low to mid single digits year in and year out. Their capital level is well above the industry peers. Tangible common equity, 7.5%. The peer group is at 6%. And higher for longer, should benefit M&T since they are slightly asset sensitive. So their net interest margin, they're projecting should stay above 3.6%, which is elevated for a regional bank, even if rates were to come down significantly. So there are a number of reasons to own some of the banks. We're cautious for the bank group from a high level, but we completely understand that many of our clients need to be fully invested. So these are some of the names that we point them to.
All right, David Chiaverini, thanks so much for your time, your insight, and those picks, David.
Thank you.
Microsoft shares edging lower after finally closed its $69 billion deal for Activision Blizzard. The biggest gaming deal ever was put on ice, remember, after UK authorities blocked the deal on competition concerns, which they say have now been addressed, giving it the green light. The move will make Microsoft a much bigger contender against its gaming rival, Sony. So this one, Julie, is all about combining Microsoft's video game business with Activision's portfolio of big hits, Call of Duty. I know you're a huge fan.
Yeah,
Play
sure.
it constantly. I can't get you off it. Candy Crush, World of Warcraft. Long time coming, because remember, this one was announced January 2022, right? What's interesting, though, is over the summer, remember, a judge blocked the FTC's attempt to stop this deal. So I reached out to the FTC, get their reaction. And here's what a spokesperson told me. We remain focused on the federal appeal process, despite Microsoft and Activision closing their deal in advance of a scheduled December appeals court hearing. They continued, the FTC continues to believe this deal is a threat to competition. So we'll see. Fighting words.
Meanwhile, because there is such a long time that lapsed between the announcement of the deal and the closing of the deal, the competitive landscape has changed to some extent. And so now, not only does Microsoft have the job of swallowing this enormous acquisition and integrating it, it now also has to deal with that changing sort of competitive landscape. So this is going to be a big job for Microsoft to do. And, I think there are some questions here over how it's going to compete and how it's going to keep up and do that. And by the way, Call of Duty, not a Fortnite. We are a Fortnite household.
That seems much more age appropriate for your boys.
And Roblox as well. Yeah. I don't know if any of these fighting things are age appropriate for anybody, but that's like the mom and me, whatever. And also, let's talk about Boeing as well. Those shares are under pressure after it announced a defect in a 737 MAX aircraft needs further inspections. These defects weighing on deliveries to their lowest rate since 2021. Shares of Spirit AeroSystems, which supplies Boeing with some of the parts for this, are also down today about 1.5%. And this has to do originally with some holes in the cladding that had been found for these aircraft, but there are some other sort of quality issues as well. And so now there are questions about the delivery schedule.
Yep.
Their goal is 400 deliveries of this plane a year, and it seems like this year, I should say. And, this may push back that goal once again.
Yeah, I think that's what gets people nervous is Boeing, of course, wants to ramp production. Meanwhile, the team at Jefferies saying that the expanded inspections include these faster holes, hand drill holes, but bottom line, more pressure mounting on 2023 deliveries, they say.
Right, and raises questions about the quality control, the ongoing sort of quality control issues at the company.
And Boeing in the red now, year to date, by the way. Shares of JD.com slumping to a record low. 7 Wall Street brokerages have either downgraded the stock or lowered their price targets in the past 2 days. It's coming after there's been speculation over the arrest of a businessman with the same last name as the company's chairman. So this is an interesting one, Julie. So it's a record low in Hong Kong, and the rumors are that a businessman who has the same name as the company's chairman has been arrested. And so now you see a bunch of brokerages either lowering the price target or downgrading the stock, like Citigroup, Morgan Stanley. Of course, the stock is a mess, by the way. I mean, look at that. Year to date, if we can bring that up, it's gotten wrecked.
I think it's down 7. I don't know. It's down 50%.
50%.
More than 50%.
Yeah. A mess is a technical term, by the way. I don't know. It's what
Yeah,
chart
no,
is
I
here.
think that I think that fits.
But also this is just coming as it deals with these broader issues of a weak Chinese economy and how it tries to navigate that.
Exactly, and consumption in particular in China. That's the real concern here. Citigroup, you mentioned, is one of the firms that downgraded it. Citigroup analyst led by Alicia Yap saying in a note today that they believe cautious consumption sentiment and competitive pricing discount are likely to weigh on any rebound in growth that we could see for JD. I should mention quickly about the arrest of this gentleman with the last name Liu. The company itself said on its Weibo account that it lodged a police report over that rumor. So it's a little confusing here, as sometimes these situations kind of are in China, and it's interesting regarding executives who then end up being detained. So there's not a lot of clarity over that, and it feels like the company itself is trying to appeal for clarity as well.
And just regardless, just one more challenge the company did not need. Yep.
Exactly. All right, we're just getting started here on Yahoo Finance Live. Coming up, sparring for the speakership. Steve Scalise out of the race for leadership in the House. Who's going to fill the position? We'll break it down, give you some contenders. And making deals. Kaiser Permanente reaching a tentative agreement with healthcare workers today. We'll get you all the details on that. Meanwhile, with another strike, no expansion. The UAW announcing it will not expand its strike against the Detroit 3 automakers. But are they any closer to a deal? We'll get an update and more when Yahoo Finance returns. Good morning. This is Yahoo Finance.
Big news, 3 things that you need to know.
We just got the announcement.
What happens now?
I got a question.
What does success look like?
What was one of the biggest challenges that you faced?
How much does that raise the odds for a recession?
This phase is over. Tell me what happens to the debt ceiling.
Where does generative AI, though, fit into your portfolio?
Talk to us about this diversification and what investors need to know.
And I think it's important. This is the stuff that gets me out of bed fired up.
What's the gateway? What's the new bridge to opportunity?
Doesn't matter if it's a soft landing or a hard landing.
Big interview. I can't wait.
Supreme Court out with the ruling on President Biden's student debt cancellation.
Right, let's turn now to some recent tech earnings. And they give you information if you watch them closely.
President Bostic, President Investors Gary Gensler, thank you so much.
Part of what Davos is about is sharing best practices, coming forward with ideas, and then enabling those ideas into action.
And I would add that there's more to come on this.
And we keep producing products that help people lead healthier lives.
This is one of those rooms they use to simulate light in space.
Interest rates will come down again.
Figure out where your money is going now. You gotta scope that out.
And the numbers really tell the story.
What does all this mean for you?
Keep it tuned into Yahoo Finance.
Philadelphia Fed President Patrick Harker saying the central bank should be done raising rates, and Wall Street seems to agree. 11% of interest rate traders are pricing in a hike at the Fed's November meeting. But what impact will higher for longer rates have on the economy? Joining us now is Ross Mayfield, Baird investment strategy analyst. So Ross, I think I did lose track, Ross, this week of how many central bankers we heard from. This is a group, they like to talk, Ross, but we did hear from Patrick Harker. Says he believes the central bank does not need to raise interest rates again. Ross, let me get your take. What do you think with the Fed? Are they done with this rate hiking campaign?
I mean, look, their SEP still says they want to hike one more time. I know that's just a median dot plot, but I think their impulse is still, if there's upward pressure on inflation and there's upward pressure on the economy, to hike one more time. I agree with Harker. I think a pause is in order, and I think they should probably be done altogether. I don't think it's worth risking the economic momentum that we still have for an extra 25 basis points or a dogged pursuit of 2.0% inflation when something like 2.5 or 3 has been the historical norm. So I would pause. I probably would have paused a few hikes ago, actually, but yeah, I think maybe we can get a pause through year end and get some relief on rates. It could be beneficial for markets and for the economy.
Well, yeah, I was going to ask about the read through to rates, Ross, right? Because there has been a lot of debate over whether rates have peaked. And then whenever we sort of have that discussion, they go back up again, right? So I wonder when we can sort of expect that peak to happen, where it can happen, and then how much of a relief that could be for equities.
Yeah, it's tricky because the Fed controls the short end, and if the Fed decides they're done, the short end is probably at or near the peak. But the long end is much more kind of fluid. It's pressured by things like supply and demand, and we've seen that this intense amount of Treasury supply is putting upward pressure on rates. It's influenced by the economy and inflation. So if inflation is a little sticky and the economy is a little resilient, that puts upward pressure as well. If there's a rush to safe haven assets like we saw at the beginning of the week, you could see downward pressure on rates. But I think the overall trend is still higher for longer at the long end of the curve, which is something that the Fed controls to an extent, but not nearly as much. So I really think you need relief on both to get a real broad and sustainable equity rally. But it can start with the Fed. And I think them, coming out and saying things like they should stop, maybe talking about when or what might implement cuts in the next year, give the market a little bit of reprieve, could be the first step for equities kind of sustaining a bull market. But it'll take more than just the Fed, because the long end is where a lot of the pressure has been in the last couple of months.
What about geopolitical risk here, Ross? I mean, the war between Israel and Hamas. How do you think Jay Powell and our policymakers are thinking about that?
Well, look, obviously a terrible human tragedy going on over there. Chair Powell and the Fed, I think they'll probably look through an event like this or give it some weight, but not as much weight as, say, the domestic economy or the domestic labor market. They've made comments about gas prices and oil in the past, which I think is the primary upside risk here. They tend to look through that. It's why they like things like core inflation, because they have so little control over energy and food prices. But they've also said that, if there's a shock at the pump and consumers incorporate higher gas prices into their inflation expectations, it can kind of feed the inflationary beast, and the Fed would have to respond to that. So it might add a little bit of complexity to their job, but I think that they'll remain focused on the domestic economy first and foremost. I think that's what you're likely to hear from them if they comment going forward.
So we have been talking about bank earnings here today, and obviously we're at the beginning of earnings season. What kind of catalyst is this going to be for stocks? Are we going to see stocks higher at the end of earnings season?
I think you could. I mean, we've had this kind of gap of catalysts, and so it's been higher rates, higher oil prices, and it's pressured equities. You've also had a big seasonal headwind through the end of the third quarter. Earnings have been positive, or at least better than expected the past few quarters. I think we're set up for another strong quarter. Financials are kind of challenged by some idiosyncrasies that, are still stemming from the higher rate environment and some of the challenges last March. But things so far have been pretty resilient or pretty good. And I think we're setting up for an earnings season once again where expectations could be beat, where guidance could be good enough to put a floor under the market. And I think you're going to see some of the trends that we've been talking about but haven't been in focus the last few weeks and months because of the focus on rates, because of the focus on oil prices, because of the focus like a stronger dollar. I think earnings can be a real catalyst for the market here. And I think early this week we've already started to see that a little bit.
Ross, final question. I'll get you out of here on this. I know you're focused right now, you said, on higher quality cyclicals. What does that mean exactly, Ross? How are you screening for those names?
Sure. So higher quality is the theme for us right now. In a challenged macro environment, you might typically turn to defensives. They haven't really caught much of a bid over the past couple of months, primarily because as yield proxies, they struggle in this high rate environment. And so what do you do if the macro is challenged? Look for high quality. You can be sector agnostic. You can even lean cyclical if that soft landing is your base case. I mean, the economy has been really strong. Q3 GDP is going to print really well. So cyclicals are not a bad place to be. Energy in particular has been really strong. But, higher rates, higher inflation, we want to focus on quality, looking at things like free cash flow growth, looking at things like margin protection, going old school, looking at things like quality management teams that might have seen an environment like this before, because it's been a decade plus since we've seen something like this. So, looking for kind of those classic high quality, traits in both the equity markets and the fixed income markets, because while we do like the soft landing narrative here, there are enough macro headwinds to make us not want to chase in some of the more speculative or risky stuff out there.
All right, a voice of calm. Ross Mayfield, thanks so much. Have a great weekend.
You as well. Thank you.
Well, it was a busy week, from big banks kicking off another earnings season, September's inflation prints, ongoing conflict in the Middle East as well. Investors were certainly kept on watch. Let's take a look at where things stand by sector. Yahoo Finance's Diane King Hall has that breakdown for us. She's right behind us on the floor of the New York Stock Exchange. Hey, Diane.
Hey, Julie and Josh. All right, let's take a look at some of the sector action. We saw a rotation in general today from a little bit of a risk on to risk off as we head into the final minutes of trading this day. So taking a look at some of the sector action, we are seeing some defensive plays in action. I know you were just talking to a guest about that. So let's take a look at the energy sector, XLE. That's getting a bid today. Right now, it is gradually marching a little bit higher. You're seeing XLE up more than 2% on the day. If you take a look at it over the past 5 days, it is inching higher. It's certainly made some progress since its lows that we saw back in March in terms of XLE. And again, this has to do with that war between Israel and Hamas, and will it escalate? And you could see a further bid there. A couple other sectors that I'm watching that are turning out to be defensive plays. Utilities, of course. People are going to hone in on necessities in times of volatility and uncertainty. So utilities are getting a bid today. Right now, that's up just shy of 1%, but over the past 5 days, it has gained some ground, up more than 3%. Another area I want to look at, consumer staples. That has been getting a little bit of some action today on the session, up just a little bit, just marginally there, up about around 0.5%. When you look at it over the past 5 days gradually inching higher. We may see some more action there. I want to take a look at two things that you're seeing outflows. You saw them move higher earlier in the session, but then you had this Friday flip-flop here on Friday the 13th, which actually traditionally for the S&P 500 normally finishes a little bit higher. We'll see if that's the tail today. The tail of the tape will be the tail of the day, but you're seeing financials, they've lost some steam since this morning. They had a bid earlier in the session. We'll see what happens by the close. And over in the tech sector, when we look at XLK, that's certainly lost some ground for the session, down more than 1% on the day. I'll leave it there. Send it back to you guys.
Diane King Hall, thank you so much.
You got it.
And coming up, chaos on the Hill. Steve Scalise is out of the running for House Speaker. All eyes are on Jim Jordan, but can he get support? I'm going to break that down next. House Republicans scrambling now to pick their next speaker. House Judiciary Chairman Jim Jordan now has a challenger, Congressman Austin Scott. This coming after Steve Scalise dropped out because he wasn't able to secure the votes needed to become Speaker. Joining us now is Henrietta Treyes, Veda Partners Managing Partner and Director of Economic Policy Research. So Henrietta, Scalise out, withdrew from the contest. Walk us through what happens next.
Well, as we speak right now, the House Republican Conference is going into an internal meeting to see if they can't take votes and choose between their two remaining candidates, as you just mentioned, Scott and Jordan. My opinion was the same today as it has been since November of last year after the midterms. I don't see how Jim Jordan gets the votes from the moderate wing of the Republican Party to get to the 217 votes that they have. There is some optimism. Members of both parties have been alerted that votes could happen through the weekend, but it looks like a heavy lift to me. And again, I don't see how Jim Jordan gets 217 votes. So this could easily be on the table for us next week and the week after. We really need a piece of major legislation to need urgent House action. Otherwise, you're just seeing this posturing and internal Republican infighting that really has been present for years now, bubbling over with this latest speaker's drama.
Henrietta, I have sort of a dumb question for you. What does the Speaker of the House do? And if there is legislation that needs to be approved next week or the week after, does a Speaker of the House need to be in place in order for that to get passed?
Not a dumb question at all. In fact, the Speaker pro tempore, which is a position that was created only in the wake of some relatively near-term events historically, is Patrick McHenry. He's there and he's been meeting with the House parliamentarian, who's basically the referee, to figure out how exhaustive his authority might actually be. According to the rules right now, all he's really supposed to be able to do is convene the vote for the next Speaker of the House. But obviously now we're engaging in a war. Israel is at war. We need aid to Ukraine. We need funding for the U.S.-Mexico border and aid to Taiwan. All of those are pressing issues that the White House is asking for legislation on as early as next week. The Senate is going to return on Monday night. And by Tuesday, Wednesday, Thursday, there could be a bill that the House needs to vote on that, by the way, many members of the House want to vote on. And we don't even know if the Speaker pro tempore is legally allowed to bring that bill to the floor. So it's a really smart question and one that lawmakers have been studying with the parliamentarian since McCarthy got ousted. My opinion is that the longer this drags on, the more authority the Speaker pro tempore will be authorized. One of the things that we like to say in D.C. is, remember, these are the players in the game, these congressmen, but they're also the referees. So when they need to change the rules, they do. And the more dysfunctional D.C. gets, the longer the Republican infighting flows and we remain without a speaker. My forecast is that the more power they are going to allot to the Speaker pro tempore position and effectively create precedent that puts Patrick McHenry effectively in the Speaker's seat, which is, I think, maybe the path of least resistance at this point.
What about also, Henrietta, this idea that maybe there's a deal with Democrats, right? There's a bipartisan deal to get a Republican speaker, or would you say, listen, forget it, at a time when every single Democrat voted to give McCarthy a boot? What do you think? Any possibility of a bipartisan deal here?
I don't think that that's realistic. I think the scenario I just laid out, where we just grant more and more power to the Speaker pro tempore, is more politically viable. What you're asking for, and you're not alone, many people are asking this question, is for a handful of Republicans to cross the aisle and vote for Hakeem Jeffries, the Democratic leader who consistently secures every single vote from the House Democratic caucus, or for a handful of Democrats to cross the aisle and vote for a Republican. Now, some of the Republican candidates that are up for Speaker did not vote to approve Biden as the president. I would consider it pretty unlikely that they acknowledge that that's a good person to lead the chamber. There's just some really basic components that will make it impossible for any Democrat to cross the aisle. And then if any Republican crosses the aisle, that's it. They've effectively just lost the whole RNC backing. Their fundraising will get shut down. They could be stripped of their committee positions. A Speaker Jeffries might try to reappropriate them and put them at leadership in certain committees if he were Speaker. But crossing the aisle is stripping you effectively of the entire party apparatus. And I think that that's really important to relay, because that's your fundraising, that's your access to emails, that's your donor list, that's your partners who will come and make your fundraiser more appealing. It's a whole party-wide apparatus, which is why, for instance, a third-party candidate doesn't win in the United States. They don't have the backing of the apparatus, and that's what crossing the aisle to vote for Speaker from another party would do. It's effectively admitting that you don't want to run for re-election again, because you'll have a hard time getting re-elected.
So unlikely then, in a word. Henrietta, put this all together for us, especially from an economic and markets perspective. What do people need to be watching here? Why does it matter in the sort of bigger picture here?
Well, I think the biggest market moving event is going to be a government shutdown. That's 5 weeks away. So we have a while before that. Right now, you're just following along with this because it's fun for you and you're into politics. The market ramifications from a stock-specific basis are not there yet because the government is funded through November 17th. If you want to get very high-minded, you can turn to the potential for credit ratings agencies to downgrade the United States the way that they have in the last couple of weeks, and certainly they did in 2011 when we got the Budget Control Act and we're about to default on our debt. So there's a big overarching macro theme from a downgrade perspective that you could play right now, and that's mostly impacting treasuries or bonds. But from a sector-specific or stock-specific reference point, you're really waiting for either a massive funding bill to come through, which would be huge for aerospace and defense stocks, as we provide aid to Israel, Ukraine, Taiwan, and the U.S.-Mexico border, whether that's for surveillance or detaining prisoners on the southern border or sending more missiles and artillery over to Israel or to Ukraine. Those are all ways to play in the next probably 2 weeks. We'll see a spending bill pass in the House and Senate that provides aid to Israel. But then after that, you're worried about a government shutdown. And when we get to a government shutdown, then what do you start to see? New SNAP recipients can't be put online. So you have shifts in the agriculture space. You have problems at airlines because FAA employees historically have not shown up to work because they're not being paid, and that leads to stop flight orders at places like LaGuardia, for instance, back in 2018. But that's a November 17th scenario, and we'll walk through that when we get there. It's too early to say. My expectation is that parts of the government shut down, but maybe not all of it, and that's mostly because we would fund defense. So in the immediate term, the defense and aerospace sector is where you pay attention.
Ooh, a lot of balls in the air, indeed. Henrietta, thank you so much. Really helpful insight on this whole situation. Henrietta Trace is Veda Partners Managing Partner and Director of Economic Policy Research. Thanks again.
Thank you.
Well, thanks. Oil prices are surging today after a U.S. crackdown on Russian crude sales. Crude and Brent are both trading higher. Then, of course, there are the latest developments in the Mideast as well to contend with. Yahoo Finance's Ines Ferre is here with all the details, pushing those prices higher today. Hi, Ines.
Hi, Julie. That's right. And oil prices started the week on Monday higher, and they are ending higher today as well. Today, up more than 5% for WTI. For Brent crude, WTI is up about 4% for the week. So taking a look at the prices on our Wi-Fi Interactive, you can see that WTI closed at above $87 a barrel. Brent crude closing above $90 a barrel. Some of this is that traders have been covering their bearish bets ahead of the weekend and calculating if Iran were to be drawn into the Israel-Hamas war. Now, Iran is a supplier of funds and also weapons to Hamas, and also a producer of oil, 3.2 million barrels a day. The market also reacting today to the G7 enforcement of those price caps on Russian crude exports. Those price caps were put in place last year. This was in order to restrict funding for Russia for its war in Ukraine. And the G7, which is 7 countries plus Australia as well, that includes the U.S., Germany, and Japan and other countries, they said that they have identified the owners of 2 vessels that were carrying crude oil, Russian oil at above $75 per barrel and Russian oil at about above $80 per barrel. And the price cap that G7 had put on those was $60 per barrel. Meanwhile, also, it's important to include that a lot of the way that these price caps work is that these vessels, these companies that transport the crude, they need insurance, and about 90% of insurance for for those transport companies comes from Western countries, from companies that are in Western countries. So a lot of volatility this week and a lot of uncertainty going into the weekend, and uncertainty if the war between Israel and Hamas were to expand. One last point I want to make, guys, is that I was talking to an oil analyst that was telling me if the war expands, you can expect that definitely oil will be diverted from consumer to military operations. So that would also impact consumer oil in the consumer market as well.
Inez Ferry, thank you so much. Appreciate it.
Thank you.
And coming up, skyrocketing popularity. Shares of Novo Nordisk trading up as the company raises its sales and profit outlook on demand for Ozempic and Wegovy. We're going to talk about what's next for the company when we return.
Shares of Novo Nordisk are trading higher again today, up by 2%. This comes as the company is raising its full-year sales and operating profit for the third time this year, by the way. The pharmaceutical company is getting a boost, citing its weight loss drug Wegovy, as well as its diabetes medication Ozempic. All of that spurring the positive outlook today. This train just continuing, the hype train just continuing here for Novo Nordisk and these drugs. And this is even despite the fact that there are shortages of some of these drugs in the United States, which maybe is letting Eli Lilly's Mounjaro gain a little bit more
What's more
share.
buzzy, AI or Novo? What do you think?
Right now,
This
at
moment.
this moment, it's these weight loss
I
drugs.
love it.
I
The
think
most valuable listed company in Europe now.
I
Right?
know,
More
it's
than
amazing.
LVMH. Right?
Well, LVMH has had a bit of a tough slog more recently after
Disappointing
hitting
results.
Yeah, I mean, it hit its $500 billion market cap, making it the first company to be above that threshold in Europe. Earlier in the year, LVMH did and then fell down, and Novo Nordisk has been up. It's not yet to $500 billion in its market cap, but it's getting
Remember
there.
this week, too, we had the studies of Ozempic's potential kidney failure treatments. Leading some to argue, what can't these drugs do, Julie?
Yeah,
where's the limit? I don't know.
Well, the limit might be again competition here in the U.S. At least for those two drugs in particular. Now, Mounjaro in the U.S. is not approved officially for weight loss. It is still explicitly a diabetes drug, but of course, a lot of people get it off-label indications for weight loss. And so there is some concern among analysts that Mounjaro might gain a little bit of market share, and also some questions about Novo Nordisk raising its forecast at this point in time. Just one thing I was looking at here when it comes to Novo Nordisk now versus LVMH. According to Bloomberg stats, at least, Novo Nordisk's estimated forward PE is 40.5. LVMH is about half that.
Wow.
Just to put it in perspective.
We'll keep watching it.
We will.
I can pretty much guarantee it, actually.
Yeah.
According to healthcare union representatives, a tentative deal with Kaiser Permanente has been reached this morning. And given the current environment, a deal between the opposing sides after only 3 days of walkouts is pretty surprising, but the disruptions were extensive given how many areas of healthcare were impacted. Let's bring in Yahoo Finance's Anjali Kamlani to give us the details. Anjali.
That's right. Lucky to hear this deal or tentative agreement now, before another strike in November that was planned by these union workers. So let's take a look at what the tentative deal includes. That includes a pay raise, about $23 for minimum wage for workers in other states, $25 in California. 21% wage increase in the next 4 years, increases in the performance sharing plan, and investments from Kaiser in job training and dealing with those staffing shortages that have been really the crux of the issue, including that cancellation of the November strike, and all of this to go in effect if ratified by those workers. About 80,000 of those by October 18th, and it would be, backdated to October 1st. Now, this has really impacted a large swath of the country. We know Kaiser is one of the largest health systems, and it has affected 4 states in total, about 75,000 workers impacted, and it's caused delays in things like surgeries, chemotherapy. Non-urgent care has been largely impacted in some of the same ways that, if you recall, during the pandemic, there were delays for non-urgent care. So that's something that has been averted by this potential deal, and we'll have to keep an eye on it. As we know, labor shortages are a very big issue today for hospitals and health systems.
And Anjali, hospital insurer contract negotiations are being widely reported this year. What's going on there?
That's right. To my point just now about Kaiser, I mean, great news on the front of, getting this deal in place. But if it were any other hospital system, they would then have to turn around and get that money for these increases from somewhere. And that somewhere is the payers, so the insurers. And so we're seeing that friction of what the hospital needs are around the country to continue to operate, while also looking at what has happened post-pandemic. During the pandemic, hospitals had to, like I mentioned before, really fix and create ways to work around the unprecedented demand on their systems. They got federal dollars in for some of the work they were doing, but with that gone away, they're faced with trying to balance out their balance sheets. Essentially, they need to look at a way to make their hospital run efficiently, economically, and not run out of money and maintain margins. So that's something that they're now fighting with insurers to increase their commercial rates, looking at ways with changes in some of the state laws and federal laws and payment models. A lot of stuff coming down on these health systems and putting pressure on their revenues. And so how this all pans out with all of these negotiations going on is going to be something we'll have to take a look at definitely by the end of the year to see how many hospitals end up out of network or how many contracts end up falling through. It's something that could potentially impact some specialties or certain areas of the country more than others. So we'll definitely have to keep an eye on that.
Yes, we will. Thanks so much, Anjali. Really interesting stuff. Well, in other union news today, United Auto Workers President Shawn Fain has confirmed that the union will not expand its strike any further, but he did give this warning.
So unless employers start coming to their senses, unless we start to see real gains in our contracts that match the gains we've seen on Wall Street, then I predict there are going to be a lot more strikes on the horizon.
Let's bring in Pras Subramanian, who's been following this process. My first question is, what did his sweatshirt say today? He was wearing an Eat the Rich t-shirt last week. I couldn't quite make it out, though.
Yeah, I actually struggled to understand what the acronym was on there. FIOM. I'm not sure. I'm not sure, but anyway, yeah, Julie. So basically, no strike expansion today, but warning that Fridays will no longer be the day that they sort of announce their strike plans. He says that the automakers are waiting. We're waiting until Friday to make their final offers, and sort of they don't want that. They want more urgency on the part of the big three. So they're saying, you know what? At any time we can stand up and strike, like they did this Wednesday at Ford's Kentucky truck plant. So some news there in some sense from the UAW. Also, Fain called on all members to join the picket line on Saturday, to join existing picket lines to show support, because that marks 1 month since they've actually began these stand-up strikes with the big three. Like you said, like Fain said, if we don't start seeing any big gains, there might be a lot more strikes on the horizon. Also want to quickly add that Stellantis put out a statement today saying that, quote, "We have made progress this week and look forward to collaboration from the UAW to reach an agreement as soon as possible to get everyone back to work." So maybe some movement there with Stellantis.
And Praz, Fain addressing some criticism he has faced about raising expectations maybe too high here in terms of his tactics and strategy. What did he say?
Well, he initially said, "I'm not the cause of raised expectations. The cause is overflowing corporate bank accounts." I think this is more of a bigger picture potentially that we've noticed with, at least with today. Maybe he feels some of the pressure from outside forces, maybe from even inside his union, talking about how, you know, Unifor struck a deal. Why can't we do this? Kind of the effects of this month-long strike are being felt across not just the workers, but also the industry. You know, he mentioned this Ford story where Ford said that they had a media roundtable yesterday talking about how they had reached their limit in terms of what they could offer the UAW. And Fain today, in a kind of an aggressive tone, said, you know who's reached their limit? Tens of thousands of workers without retirement benefits. Sort of responding to that, but also by maybe showing some element of frustration about the length of the strike, where they want to go, and maybe some pressure both internally and externally for the UAW.
All right, the strike continues, and we'll be paying attention to it. Praz, thank you so much for that.
Thanks, man.
And coming up, closing bell on Wall Street. We're going to be checking in on the latest market moves and the top trending tickers. Stay tuned.
We just heard the closing bell on Wall Street here on this Friday afternoon. There you got the closing gavel. So let's get a check on markets here. The Dow finishing the day up by about 39 points, just 0.1%. The S&P off 0.5%. and the Nasdaq down by about 1.25%. And I want to go inside the Yahoo Finance Interactive to take a look at some of the other stats that we are watching on the day, but also on the week since we're a Friday here, Josh. So on the week, the Dow Jones finishing higher. Ooh, a little extra bill here on
It's
Friday.
Friday.
I guess I go, oh, the guys on the floor don't like that. So the Dow up about 0.75% on the week. The S&P, despite today's drop, up about 0.5% on the week, and the Nasdaq still a little bit in the red on the week over that 5 days, down about 0.2%. I also wanted to get a check on what we saw sector-wise, both on the day and on the week. Tech, consumer discretionary, communication services, the worst performer in the week. Energy and utilities coming back on the day session, I should say. Here's a look at what we saw in the week. Consumer discretionary, the worst performer. Energy, Josh, quite interesting here, coming back on the week along with oil prices. And utilities, we talked to Mike Darda yesterday.
He's a fan.
Over at Roth MKM, who likes utilities, right? Saying, if we start to see some more moderation in those interest rates, that could be good news for a group like the utilities.
Yeah, it was interesting because we had other guests, though, just take the other side, we had other guests who said, they weren't fans because they just didn't think those go-to yield plays would work. But Darda is a believer.
Yeah, he is a believer. And also, as we close out, I wanted to look at some of the bank stocks, right? Because we did get, of course, the big banks kicking off reporting season here. Wells Fargo finishing the day higher by 3.1%.
Yeah, look at
That's
JPM.
after those numbers beat estimates. JPMorgan beating estimates, particularly the two banks with their net interest income doing well. Citi, though, not so lucky, finishing the day off by a 1/5%. Now, in addition to the company coming out with its numbers, by the way, it's trading results beating estimates and helping lift profit. But also we learned through its results that it had laid off about 2,000 workers, had cut about 2,000 workers in the last quarter. This all part of the reorganization that CEO Jane Fraser has been doing at the company. Still, for the year, Citigroup shares are down by 8%. So they have been underperforming the other banks.
Yeah, interesting, too. I'm sure traders, investors are thinking also, what did they learn today from some of these big banks? What does it tell them about the other big reports we have on deck for next week, like Goldman, like Morgan Stanley? Of course, we have a great guest to talk about that with us coming up.
Yes, we do in just a few minutes, and also trying to extrapolate what all of this means for the economy of the U.S. as well. That's another read through that people try to get from the banks. One more thing I just quickly wanted to check on before we leave you as we take a look at what happened on the day is the trending tickers on the Yahoo Finance platform. JPMorgan was the top there. Uber also on the list, interestingly. Yeah, that one crept off on me. It's off by 5% on the day. Not sure exactly what's happening there. Activision, even though it's not trading anymore, right? Because it got taken over by Microsoft. And then Wells Fargo and Citigroup on the list there as well, as crude futures up on the day by 6% here.
That's a pop.
And the 5-day move in oil, actually, I thought we would be up on the week, but we were not. A lot of volatility over the week in those oil prices.
So people still trying to figure out. Right now, I think the market's thinking that the war between Israel and Hamas is contained, it'll stay limited, but obviously that is creating nervousness about what if it doesn't, what if it spills over.
Right, as we are looking at a potential ground offensive now from Israel into Gaza. Looking at some of the other individual movers that we were watching on the day that we haven't yet talked about, Progressive, those shares are at a record high on the day, up 8%, and that's after the company reported strong September and third quarter results here. And it looked like underwriting profitability was improving, and the company's pricing also improving, so that helping the numbers.
Yeah, last time they reported, remember, over the summer, not such a great reaction, not such a great response, but this today, that was a sharp move higher, up over 8% in today's trade. I know Jefferies, for example, like what they see, strong year-over-year and month-over-month improvement in underlying results, is what they were telling their clients. So a nice move today, and that stock up about 20% now so far this year.
Yeah, and one of the other measures you look at with insurers is called the combined ratio. You look at it for health insurers, too. It basically looks at losses and expenses against the premiums that they have brought in. And it was 89.7%. So a lower number is good because you want to not be spending everything on all of the premiums that are coming in. You want to keep on to some of them. So that is down quite a bit from the 97% in August. So a big improvement, in other words, in that measure of Progressive's results.
All right, from insurer to the yellow metal, let's talk gold. Having its best week since March, by the way. Prices rising this week. amid the Israel-Hamas war, investors pushing into the space as a safe haven amid this conflict. So makes sense, Julie, right? When there is war, there's tension, there's conflict, there's a lot of uncertainty. We were just discussing about whether that conflict broadens with a ground offensive by Israel. Does it drag in Hezbollah? Does it drag in Iran? Just lots of uncertainty. In addition, what that, of course, would mean for oil, the energy markets. When people feel that kind of nervousness, they feel that kind of uncertainty, they look to safe havens and, of course, gold. But it would be one of your go-to moves there.
Yeah, and it's a switch for gold, which had been going back towards 1,800, as we just showed on that chart, and now going up back to the 1,900 level, which is the level that we haven't seen in a little while here. There's that chart that we have seen for the year. So interesting that it dipped down to 18 and then made a pretty rapid move, especially when you consider that gold does not always make that kind of a rapid move. So interesting to see that there. We're also seeing a surge in options trading on the Spider Gold Shares ETF, GLD, right? Implied volatility for options also up the most since March. So another measure, effectively, of interest there. By the way, the move that is happening in gold is not just happening in gold, of course. You're seeing it in other asset classes, too, where investors are looking for safety. You could argue that utilities, which is viewed as a defensive sector, that part of the move there is spurred by that. And then also the move down in yields that we have seen a little bit this week is because people are buying treasuries, which again are seen as, on a relative basis, a safer investment.
And reports noting with that move in gold, by the way, you are breaking through some key technical levels as well, so one to keep an eye on.
Yeah, definitely. One more stock that we are watching, AMC, after getting a little bit of a pop yesterday, plummeting today by about 14%. Trying to figure out exactly what's going on here. Could be the Taylor Swift Eras Tour movie, which brought in $2.8 million at the box office for Thursday previews. It sounds like a big number. It was below the estimate of $5 million, but it seems like it mostly has to do with timing. Swift moved up unexpectedly the timeline of the movie's release, which could have limited marketing and ticket sales because people didn't have a lot of time to then get tickets and react when she moved up the release time. So
I'm also impressed just by the bold icon move like of Taylor Swift, who, I'm reading through these reports today, she negotiated directly with AMC. So she bypassed the Hollywood studios in the distribution deal, which means she skips the distribution fees, which means maybe even more lucrative for her.
You know what always cracks me up?
Yeah.
Do you think Taylor Swift herself was sitting down and doing these negotiations?
I don't know.
We always use Taylor Swift as shorthand, but how many people does she have working for her? She's got a team.
I would assume it's a machine.
She made a good choice in whoever she's hired to do this kind of work.
You're saying she's not at the table right now, just making these deals with Adam Aaron? You don't think so?
Yeah,
maybe. Who knows? Who am I to say? I don't know.
I don't know, but I don't think the assumption is that she is, right? Like you said, it's a machine around these stars.
Taylor, I'm giving Taylor the benefit of the doubt. Who knows? Maybe she's got the whole thing plugged in.
Sure, let's give her benefit of the doubt. Oh, so many people do. All right. Let's talk more about bank earnings. Now, bank earnings kicking off with a bang today with strong results out of JPMorgan, Wells Fargo, and Citigroup. JPMorgan seeing profits jump by 35% from the same quarter last year. Wells Fargo beat estimates, raising its annual forecast and benefiting from a rising rate environment. Could the bounce last? We shall see, especially as bank executives are warning about new capital requirements. Should investors be concerned about that as well? Joining us now, Chris Whalen of Whalen Global Advisors. Chris, it's great to see you. And I actually want to start there with these new capital requirements, which the banks are sounding the alarm on. How onerous is they going to be? And is this a reason for investors to not own the banks?
It's not going to help, Julie. The regulators have reacted to what occurred in the first quarter when we had several banks fail. So they're catching up. They are under attack by not just the banks, but by everyone in the housing industry, because a lot of the changes they're going to make mortgages more expensive for consumers. So I think, we'll see. I'm not sure this thing is baked yet. Let's put it that way.
And Chris, what about loan loss provisions in terms of what they set aside this quarter versus last quarter? I'm just interested, what you heard today and what do you make of those trends?
Well, here's the thing. The narrative that you're hearing from the banks is that they beat on earnings and net interest income, but that's only if you compare them to last year. If you look at them sequentially, they're down. Jamie Dimon at JPMorgan is really the only exception to this. So the big headline for earnings this quarter for me is lower provisions. Almost all of the banks had lower provisions in last quarter. They've already been putting aside for the industry about $20 billion a quarter, and losses aren't even half that. So they don't really have to put more aside. And the key here is that this is not a consumer recession. We have this silent institutional, commercial real estate recession, and you have the banks under a lot of pressure because of interest rates. But the consumer hasn't rolled over yet. You don't see it in defaults in credit cards and autos. So, a lot of people have been predicting the end of the world, but you just don't see it in earnings. I think they're a year early, to be honest with you. And the big issue for the banks is loans. They got to go find the assets. You're not seeing a lot of lending right now because rates are so high, and the traditional sources of new assets, new loans, both commercial and residential, are just not doing much business right now. We're not even going to do $1 trillion in new mortgage loans this year. Commercial is also very quiet because nobody knows how to value these assets. That's the big issue. If we see another bank roll over this quarter or in the fourth quarter, the FDIC is not going to be able to sell them because rates are still rising. It's hard to sell assets if you don't know what they're worth.
And Chris, you did mention there just a subject we talk a lot about here, commercial real estate. I mean, obviously office buildings not filling up like they once were. How much of a risk of that do you think is for the sector? And are there certain names, Chris, that you think, hey, they're more exposed than others?
It's a risk for the whole sector, but it's not a risk that you can generalize about. So, for example, you might think down south or out in the west is better than New York City, but not necessarily, because some of those markets were overbuilt. Each bank is going to deal with their commercial defaults the way they usually do, which is to slow walk the loss recognition, put them on ice for a year or two, and see if they can find a buyer. That's the way banks deal with commercial real estate. So I think, it depends on who you look at, but look at New York City. The city is full of tourists. The buildings are empty. So over time, if you follow the commercial press, you're going to see that most of these assets are going to be restructured, the B, C, D kind of properties. The A properties are still okay, but getting people to come back to the office has just not been successful so far.
So obviously there are some challenges still for the banks here, but I'm always struck by the sort of tone versus how they do. I mean, these first three big banks that we heard from, I think we can say they did well, right? I mean, even though Citigroup shares didn't do much today.
Yeah.
They did better than the rhetoric, it seems like.
Well, because
so do you buy the banks here, I guess?
Yeah, it's not a bad quarter, Julie. But the problem is that there's no visibility on earnings this year. If anything, we're expecting down. You look at the analysts, that's what they're predicting. So I think the problem for the industry is that funding costs are still rising a little faster than asset returns. If you were going to, summarize it, that's what's going on.
And Chris, did you hear anything today which maybe gives you some clues about what we could hear from Goldman and Morgan Stanley when they report next week? Goldman, October 17th, Morgan Stanley, October 18th?
Well, clearly, if you looked at the investment banking and capital markets lines at JP, they're pretty soft. And I think what you'll see with Goldman and Morgan Stanley is the same thing on the capital market side. The asset management side of Morgan Stanley is going to be as you would expect. And the big thing for both of them is funding costs. They fund off the market. Neither one of those firms has a big deposit base, so they tend to follow market rates pretty much 100%. And that is going to, it'll slow them down. They had great funding 2 years ago. And Goldman has a lot of institutional businesses, even after they got rid of Marcus, by the way, that are still generating pretty outsized credit losses. So I would watch credit with Goldman when they report next week.
Chris, who do you think is best positioned? Now that we've heard from three, obviously we still have a lot to go. But who do you think is best positioned right now?
Well, Wells is the most improved student in the class. You can see that in the stock. They are slowly getting their act together, but they've also cut back a lot of their traditional institutional businesses. They're getting out of mortgage. They're not buying third-party mortgages anymore, which is a big deal. And I would also say that Jamie Dimon, he's got 8-10 points of efficiency advantage over all the other big banks. How do you compete with that? And even if you take First Republic out of the numbers, he's still killing it. in terms of controlling its expenses. So you look at Citi, they have to get down into the low 60s in terms of efficiency before they can even be considered credible. And that's how they're going to get the institutional investors to come back and support the stock. So I like Wells. I've been owning New York Community Bank, as you know, since the Signature transaction. They're the second largest warehouse lender in the U.S. after JP, a little bank, but now they're a national. And the funding that they picked up from Signature was transformational. It's ironic that they, in the whole group, you have UBS, Deutsche, JPMorgan, and New York Community Bank. Those are the best performers in my group. So what can you say?
What can you say? Chris Whalen, thank you so much for your time and your insight, Chris. That was great.
Have a great weekend,
Chris.
guys.
You too. You too. And coming up, a changing world. We're going to break down how one business is helping other companies navigate new rules around AI.
Let there be no doubt. The United States has Israel's back. We will make sure the Jewish and democratic state of Israel can defend itself today, tomorrow, as we always have. It's as simple as that. These atrocities have been sickening.
That was President Biden earlier this week delivering strong remarks condemning Hamas's attack on Israel. But has the president's messaging had the same fiery resolve for other issues like aid for Ukraine or the economy? Yahoo Finance's Rick Newman, he doesn't think so. Rick, you writing this week about his delivery of that very strong speech. And as you say, a passion that maybe was lacking when he's messaging on other issues.
Possibly the best speech of his presidency so far, and more than just a speech. I mean, I think he's providing Americans and people in Israel as well and people elsewhere a way forward and a way to think about this. I mean, he's clearly channeling the outrage millions of people everywhere feel about these attacks on Israel. He's crystal clear. United States stands with Israel. He's not going into, well, what about, should we, have some sort of sympathies for the plight of the people Hamas represents? He's just putting that aside for the time being and saying, first things first, we got to stand with Israel. And what I noticed about this is people I follow, political analysts and other people like that who are normally very critical of Biden are saying he's just handling this extremely well. And he's a hero in Israel for the way he has stood up for Israel here. So Biden is showing his inner statesman, if you will, and it just makes me wonder, where is this inner statesman on all these other issues? I mean, when you talk about Ukraine, which aid for Ukraine, which is now in jeopardy, by the way, Biden has not once ever given as much as a 10-minute speech to the nation as he did on Israel to say, here's why it is in the interest of American taxpayers that we send this money to Israel. Here's why people who might be struggling to pay the rent need to get behind this. He's never made that case. As far as the economy goes, Biden talks about the economy all the time. He gives speeches all the time. I watch some of them. I read some of them. And he's not moving anybody when he talks about the economy. He basically says, here are the good things we've accomplished. Here's what we have yet to do. And the facts are somewhat on his side, super low unemployment rate, and yet voters give him terrible marks on the economy. And his his approval rating just dipped below 40% in the aggregate, followed by 538. So Biden's showing some fire here this week with regard to Israel, and it just remains an open question, where's his passion on the other issues?
And Rick, I want to switch gears here a bit because we're just getting word that House Judiciary Chair Jim Jordan has just secured the nomination to be House Speaker, but getting the job isn't a done deal. Of course, he's got an uphill battle here to get to 217 votes, Rick.
I mean, where are you guys putting your money? You think Jim Jordan's going to be the guy? He's more conservative than Kevin McCarthy. He's more conservative than Steve Scalise, who couldn't get the job. So maybe Jordan can get those the votes of those 8 or 10 renegade Republicans who have thrown the wrench into the works here. But he also seems unlikely to get the votes of some moderates. I mean, he is one of the real bomb throwers among the Republicans. Kevin McCarthy, I think, once called him a legislative terrorist. And you've got some moderate Republicans. I mean, people may forget there are moderate Republicans, but there are, I think, at least 15 House Republicans that represent districts that Joe Biden won in the 2020 election. So they are, they're holding on by a thin thread in those districts. And I would note 15 of those moderates is more than the 8 who voted against McCarthy. So I don't think Jim Jordan's going to get it. I mean, what are they going to do? Is every single House Republican going to go for this vote? And when they can't elect any of them, are they going to go outside? I still have no idea how this ends, and I don't think Jim Jordan is the conclusion.
Rick Newman, always love having you. Have a great weekend.
You too, guys. See ya.
And global regulators are in a race to get a handle on artificial intelligence, but building laws that protect citizens from the risks while encouraging innovation is a hard balance to strike for sure. EU has taken the lead here, as it has on other tech-focused regulation, creating an AI-specific law banning certain technology like facial recognition and enforcing that generative AI systems like ChatGPT have to be reviewed before commercial release. The U.S. is further behind as lawmakers still seek input on regulation, and the White House unveiled its blueprint on AI. So with rules coming, what can you expect? Joining us now is Credo AI, Navrina Singh. Navrina, let's start there with regulation, because the EU does have this proposed law to regulate AI. You're very involved in this sector. You know a lot of the players. Navrina, how are companies thinking about navigating that new law?
Thank you so much for having me, Josh. Credo AI is a leading authority on AI governance, risk management, and compliance. So since our founding, we've been extremely focused on making sure that AI is always in service of humanity. So as you can imagine, with these upcoming regulations, and I do want to specify that EU AI Act is still not passed, it's being debated, and we are looking to European Commission to pass that end of this year. So with this impending law, you can imagine these companies right now are making sure that they have the foundational pieces in place, whether it is assessing risk management frameworks within the organizations or making sure that they have a handle on where they're actually using AI versus not using AI. So long road ahead, but I'm excited to see the work that enterprises are already putting in place.
Navrina, one criticism I've read about the EU law, and I'd love to get your take on it, is that some are saying it kind of benefits those companies who have the money, the cash, the resources to cover the costs of compliance while disadvantaging the smaller players. Do you agree with that criticism? Is it fair?
You know, Josh, with any regulation, the narrative that we've always held in the marketplace is, regulations and compliance is cumbersome. And I think this is the moment in time, especially for artificial intelligence, we all have an opportunity to change that narrative. With the EU AI Act, yes, absolutely. There's a lot of critical requirements around transparency, risk management, making sure that you're actually registering AI applications in Europe. But as you can imagine, companies like Credo AI are existing to actually make it less burdensome and change compliance to a competitive advantage, especially for SMBs and startups. And that is a critical focus for us here at Credo AI, because in this age of artificial intelligence, companies that embrace governance are going to actually emerge as leaders.
Hi, Navrina, it's Julie here. So I guess what I'm not understanding is what is already regulated. Like the companies that are coming to you and saying, what do I need? What compliance do I need? What is the biggest thing that they need to do? Because rules haven't actually been put in place yet, have they?
Great question, Julie. And I think this is where there's a lot of noise in the ecosystem. We actually already have existing regulations that apply to machine learning and artificial intelligence. For example, New York put in place something called as New York City Law number 144 that went into effect this July that already regulates machine learning-based HR systems. In addition, fair credit reporting has existed for years that still applies to machine learning and artificial intelligence. I think the shift that is happening in the AI ecosystem is, one, the consumer is getting more educated. So when there is an AI application that impacts the end user, whether it is for healthcare, whether it is for employment, whether it is for education, there is an uprising around need for transparency. Where AI is used, how is it being developed, who is testing it, how are there's going to be rollback plans in case things don't, work as planned in production. So I would say that there's a consumer uprising, and also there is much more focused AI regulation that is emerging, and that's what's causing the shift right now. But I do want to underscore, Julie, there's already a lot of regulation that applies to machine learning and AI that companies are already trying to adhere to.
That is good to know, Navrina. I also want to mention a study that I know that you are aware of as well from the AI Policy Institute that, for lack of a better word, reflects the sort of that people are freaked out about AI, right? 72% of American voters want to slow down the development of the technology, and 82% don't trust AI companies to self-regulate. So obviously there's some urgency on this. When it comes to regulation, on a federal level or on an EU-wide level, what's most important and what's most urgent? Is it the transparency you're talking about needs to be enshrined, or is there something else?
No, that's a great question, Julie. And this is where, I would say Europe's approach versus United States approach has been very different. I think irrespective of where the regulations are emerging, we at Credo AI believe that there are certain core tenets. And as you articulated, transparency is really important to not only understand the capabilities, but also risk of these systems and where they should and should not be used. Similarly, there needs to be complete view into where human oversight is needed. And as you can imagine, especially for these very powerful foundation models, human oversight is going to be critical to make sure that we are putting in place the right accountability. And then lastly, as you can imagine, there's a lack of evaluation standards, especially for foundation models and generative AI. So how can we put in place the right, robust evaluation standards that can make sure that that accountability actually happens is really critical. And just to close it out, Voluntary commitments are something that we've seen emerge quite extensively in this market, but they don't serve the purpose. We've seen they lack impact, and more importantly, there's no benchmark to hold companies accountable to those voluntary standards. And that's why I truly believe that regulations and more stricter guardrails are going to be necessary to really reap the benefits of this powerful technology.
Yeah, Congress and regulators broadly have to get their act together on this. Navrina, thank you so much for joining us with your perspective. Navrina Singh, founder and CEO of Credo AI. Thanks.
Thank you.
Coming up, a little math equation. The future of cars equals EVs, but the future of EVs maybe equals flying cars? We're going to talk about it next. Good morning. This is Yahoo Finance.
Big news, 3 things that you need to know.
We just got the announcement.
What happens now?
I got a question.
What does success look like?
What was one of the biggest challenges that you faced?
How much does that raise the odds for a recession?
This phase is over. Tell me what happens to the debt ceiling.
Where does generative AI, though, fit into your portfolio?
Talk to us about this diversification and what investors need to know.
And I think it's important. This is the stuff that gets me out of bed, fired up.
What's the gateway? What's the new bridge to opportunity?
Doesn't matter if it's a soft landing or a hard landing.
Big interview. I can't wait.
Supreme Court out with the ruling on President Biden's student debt cancellation.
Right, let's turn now to some recent tech earnings. And they give you information if you watch them closely.
President Bostic, President investor Gary Gensler, thank you so much.
Part of what Davos is about is sharing best practices, coming forward with ideas, and then enabling those ideas into action.
And I would add that there's more to come on this.
And we keep producing products that help people lead healthier lives.
This is one of those rooms they use to simulate light in space.
Interest rates will come down again.
Figure out where your money is going now. You got to scope that out.
And the numbers really tell the story.
What does all this mean for you?
Keep it tuned into Yahoo Finance.
We are rounding out our special week of EVs, the road ahead, with a look at the future. Doroni Aerospace is one of several companies that make eVTOLs, which take off and land vertically. Company completed its first manned test flight over the summer. And joining us now is Doron Merdinger. Doron, thank you so much for joining us.
Thank you very much for having me.
Doron, I'm interested when you talk about these flying cars, Doron, who is your target customer? Who do you think this product is designed for and makes the most sense for?
So it will start as a leisure market for people who can afford. Obviously, this is a novel technology, so not everybody at the beginning at least. People who can afford a $300,000 vehicle is our target. We also expect to have more, for first responders, but this should go in the next stage. But we already have over 370 pre-orders requests, mostly for people who can afford it, obviously.
And Doron, it's Julie here. What's the timeline then for the product, and not just for you guys to deliver, but I'm curious where you think what the sort of longer term potential is for adoption of these vehicles?
So I'll start with the second question. I think the long term is just infinite. This machine can be used for endless use cases. It can rescue people. You can go and play on a yacht. You can use it for first responders. You can use it for just travel or other industries. We expect to start delivering the first units 2025. This is the first couple of units that we are, this is already pre-ordered, and then scale up production from there.
And Doron, what has been the response of regulators?
So it's interesting. It's hard to say, but the thing is that the United States, the FAA, is really behind China, Europe, and South America. As far as the eVTOLs, we are doing a personal eVTOL, and there's kind of new advances in this. We're going to call mosaic rules for personal use and LSA. So, the US, the FAA start picking up. We are working with them. We're advising them as well. We're part of the groups over there. And it feels that it fits in our certification or the process of development. The certification path basically is there. We expect
Doron, There are a couple of other companies that are also in the eVTOL space. Going forward, what do you think is going to be, how is the competitive landscape look to you, and how does Doroni going to distinguish itself from some of the others?
So most of the eVTOLs are targeting an air taxi. So this is different type of use cases, certification, more complicated what we do. It's not for everybody. A personal use. What the machine that we're doing is for sale. It's not a ride-sharing one. So more affordable. We're talking about $300,000 to $400,000 vehicle compared to $15 million. We believe that what we have is we're at the front of it. The most novel, advanced technology. As we are the first ones to fly manned in the U.S. With such a personal aircraft inside this facility, as you probably seen. We're doing well. We're very comfortable with where we are, and the sky is the limit here as far as what can you use this technology for. It's amazing. We believe the world is about to change once we come up with the product which is certified. And in fact, what you see behind me is already a full-scale one that we're flying, and it's to be the same measurements. So it's now we're creating now the product, the go-to-market product, which will be on the same basis, but will be all the certification and basically the intact airframe.
And Doron, two questions. One, how high can they fly actually? And two, what kind of safety precautions do you all build in for the user?
So safety, and it will also respond to the initial question before. We're doing ducted fans, so that's basically protects from injuries. You can fly up to close to 8,000 feet, but to be honest, the best or most experience you can have is a couple of 100 feet above ground. Think about that the best videos you see today are shot by drones, a couple of 100 feet above ground, and the whole idea is to be part of nature, not to destroy nature. It was creating new roads. A couple of hundred would be the comfortable level that we're talking about. It's an amazing experience, as I experienced it myself here. There's nothing that resembles that.
Yeah, we saw you take a little ride on your homepage on the website, which looks like a lot of fun. Daron Merdinger, thank you so much. And we're, of course, showing that footage as well. Thanks so much for your time. Have a great weekend.
Thank you for that. Thank you. Bye-bye.
Coming up, Amazon digging further into the health sector. We'll hear about how from the company's Senior Vice President of Health Services. That's next. Amazon infiltrating so many aspects of American life, and one area the tech giant is pushing into further is healthcare. Our own Anjali Kamlani sat down with Amazon Health Services Senior Vice President Neil Lindsay at the health conference earlier this week, and she first asked him about the progress the company is making now after struggling previously in the space.
At Amazon, we're always trying to invent to make customers' lives easier, right? Our mission is to be Earth's most customer-obsessed company. So that gives us permission to go anywhere where there's an experience that needs improving. And as we all know, unfortunately, there's plenty of opportunity in healthcare to improve the experience. So we've had various ideas at different points in time, and we learn from all of them. And our focus is very much on how do we make it easier for customers and patients to find, choose, afford, and engage with all of the products, services, and professionals they need to get and stay healthy. That's a pretty big mission. But we are very focused on how we make it easy to get care, how we make it easy to get medications, and ultimately how do we make it easy for you to find the things you need to get and stay well. And so that's our mission, and we have a few efforts going on in that place, as you mentioned. We have One Medical, we have Amazon Pharmacy. We also have a service called Amazon Clinic. So when we think about making it easy to get care, we think about it in two different need states. Mm-hmm. There's the 40% of people who don't actually have a primary care physician but still need to get care, and it can take 2 or 3 weeks, or sometimes 3 or 4 weeks to get an appointment with a doctor. So Amazon Clinic tries to make that much easier for common conditions, low acuity conditions, for people to be able to access from a selection of providers, either do text or video to either validate what they think they might have or to correct it and then get a treatment. They can send that treatment, if it's a medication, to any pharmacy, including Amazon Pharmacy. And then, of course, we want to make sure it's easy for people to get the primary care we all deserve and need, frankly, that care management for ongoing needs. And that's why we have One Medical, which we're excited to make available to more and more people. And then, of course, I mentioned making it easy to get medications, and that's Amazon Pharmacy.
And you're growing that, right, from what I understand?
We're in this to make it easier for customers, and to make it easier for customers, we're going to make it more accessible, and that means growing it also.
I'm so glad you used the word low acuity, because that's a really important way to describe what is going on in this retail big box medicine space, right? There is a lot of need for more access points, like you said, really getting to the customer where they're at, making it convenient for them to schedule an appointment. That's the goal. As a millennial, I can totally appreciate that. But talk to me about how that affects the broader health ecosystem, and whether or not conversations are happening where you think about how does that affect tertiary care and the infrastructure they need to kind of stay afloat with charity care and the like. There's a lot that goes on in the health ecosystem. How do you disrupt it but not destroy it?
Well, our mission is not to disrupt anything. We don't go into anything with the idea that that's a goal. Our goal is
You should tell everyone that, because they're all convinced you're going to disrupt it.
Well, we don't have a magic wand. What we do is we look at what are the experiences that need to be improved that we can make a difference in. And what we're good at is connecting the dots between people as customers and humans to the products and services they need. You do that in a general sense. And in healthcare, the need is the same, right? We need to connect the dots. Remembering also that 60% of everything we sell on Amazon is sold by a third party. Right. So we don't need to do it all ourselves. We'll do things first party where we believe we can elevate the experience. So Amazon Pharmacy, One Medical, we believe are elevated experiences where we can take our expertise and make a difference. When we, in Amazon, we often talk about selection, value, and convenience as key to making things easier. In healthcare, I've translated that to sort of choice, convenience, and continuity of care. That choice is important because it gives customers agency. One of the things that in a retail environment, customers do have agency. They have informed choice. Patients don't always feel like they have agency. They don't feel like they have choice. So we need to give them choice. Secondly is convenience. Convenience is key because if it's easy, people will engage. If they engage, they'll get better health outcomes. If they don't, they won't. And the problem is it's hard to engage right now. If it takes 3 or 4 weeks to get an appointment, if you have to line up with 15 other people who are not feeling well at a pharmacy and wait 20 minutes to get your medications, it's not easy. People aren't going to do it. They're just going to not get well. Right. And it's costing us a fortune as an economy. So, and then the final point is continuity of care. Ultimately, we all need and deserve that continuity of care that a service like One Medical provides. But to be clear, we're excited by wherever anyone gets their care. There's so much need in healthcare to make it easier that we're working hard to do it in whatever way we can, and I celebrate anyone else who's making a difference in making it easier.
So final question for you, on the pharmacy side, you have a lot of partners that are willing to come, the automatic coupons, for example. I know that was a really great idea. But then what about the idea of breaking open that whole system of getting access to medicine, breaking apart the PBM system, getting the drug manufacturers to sell directly on Amazon? Can that happen?
Yeah. Well, look, I think one day at a time here, right? And, our whole mission, as I said, is, I think of it this way: if we can make one little thing a bit easier for a lot of people, it'll save them a lot of time, a lot of money, and probably some lives. If we can stack up a few more of those, it'll save a lot more people, more money, more time, and more lives. And over time, you stack up to what is, feels like a reinvention. And if you think about Amazon more generally, that's kind of what's happened, right? If our 25 plus year history, there's not one moment where it was like there was this magical thing and it all changed. It's over time we've stacked up these innovations, some of them small, some of them larger, to make life a lot easier and a lot better. And that's all we're trying to do in healthcare. So, I'm focused more on what can we do next week, next month, and next year to make a difference for customers and patients and members and make their lives better.
Slowly but surely, those building blocks and learning the system all at one time, right?
That's right. Well, I guess so too. Yeah, we have a lot of healthcare expertise in our team, but it's new to us as Amazon, and we know that. We know that we have to come with this with a lot of humility and learn from a lot of folks, and learn from our own experiments as well. But there's a lot of opportunity to make a difference in people's lives, and we're excited to be doing it.
We'll have to leave it there. Neil Lindsay.
Thank you very much.
SVP of Amazon Health Services.
Great.
Thank you for joining us.
Great to be with you.
Coming up, it's closing time here on Yahoo Finance. We recap the top stories of the day and get you set for everything you need to know tomorrow. Stay tuned.
Good morning. This is Yahoo Finance.
Big news, 3 things that you need to know.
We just got the announcement.
What happens now?
Now I got a question.
What does success look like?
What was one of the biggest challenges that you faced?
How much does that raise the odds for a recession?
This phase is over. Tell me what happens to the debt ceiling.
Where does generative AI, though, fit into your portfolio?
Talk to us about this diversification and what investors need to know.
And I think it's important. This is the stuff that gets me out of bed, fired up.
What's the gateway? What's the new bridge to opportunity?
Doesn't matter if it's a soft landing or a hard landing.
Big interview. I can't wait.
Supreme Court out with the ruling on President Biden's student debt cancellation.
Right, let's turn now to some recent tech earnings, and they give you information if you watch them closely.
President Bostic, President investors Gary Gensler, thank you so much.
Part of what Davos is about is sharing best practices, coming forward with ideas, and then enabling those ideas into action.
And I would add that there's more to come on this.
and we keep producing products that help people lead healthier lives.
This is one of those rooms they use to simulate light in space.
Interest rates will come down again.
Figure out where your money is going now. You got to scope that out.
And the numbers really tell the story.
What does all this mean for you?
Keep it tuned into Yahoo Finance.
It is closing time here at Yahoo Finance. Blockbuster earnings for banks have kicked off the start to the earnings season. JPMorgan, Wells Fargo, and Citigroup all beat analyst expectations, benefiting from the high rate environment. But growing uncertainty from war in the Middle East to higher capital requirements is leaving the outlook for the banks less bullish for the next quarter. House Judiciary Chairman Jim Jordan winning the Republican nomination for House Speaker, but Jordan faces the challenge of actually winning the speakership, similar to what happened to Congressman Steve Scalise the first time around. Whoever ends up being the nominee needs 217 votes to become Speaker. The House can conduct no business, including approving new aid to Israel and its war against Hamas, until a new Speaker is in place. And the UAW shifting its strategy and how it calls for strikes. The president of the union said it will now announce walkouts with little notice, like they did in Kentucky this week, to cause more pain for the big three automakers. Sean Fain did not expand the action further today, but warned that more could be on the horizon.
And here is what to watch next week. After a week of Fed speak and rising yields driving market action, corporate earnings are going to take center stage. Results from Bank of America, Goldman Sachs, and Morgan Stanley will provide a deeper look at how the financial sector is responding to the rising rate environment. Several regional banks are also on tap. Meanwhile, Tesla and Netflix will highlight the start of tech earnings. Tesla recently missed Wall Street's estimates for third quarter deliveries, and margins remain, of course, a key concern for the company. It will report earnings on Wednesday after the close. As will Netflix, and investors will be looking for updates on its password crackdown, ad tiers, and price actions. Wolf Research downgrading the stock ahead of results amid fears that the recent changes won't help future growth. And speaking of retail, the September retail sales report will provide an update on the consumer. That's out on Tuesday. We'll also be getting a look at the housing sector. Builder confidence, plus housing starts and building permits, and existing home sales are also out next week.
That'll do it for Yahoo Finance today and for the week. Be sure to come back Monday. Josh and I will be here at 3 p.m. Eastern for all your coverage up to and after the closing bell. Woof.
Weekend.
It's time for the weekend. Have a good one, everybody.